The crypto market has been going through one of its most brutal stretches since late 2024. This is not a pullback. This is not a dip. This is a wipeout. Over $2 trillion has been raised from the total crypto market cap, and roughly $800 billion of that vanished in just the last 30 days. Bitcoin has lost over 50% of its value from the highs. Solana is trading at a level we haven't seen in over 2 years. And right now, the market is sitting at extreme fear. And this is usually the point where people panic, sell at the bottom, or completely freeze. But if you've been following me for a while, you remember something. When Bitcoin was trading around $98,000, I made a video saying clearly I was not buying there. I said I will start paying attention again when the price is around $70,000. So the question now is simple. Is this part of the plan, or has something fundamentally changed? Because here is the truth most people miss. Crashes like this don't destroy wealth. They transfer it. The problem is not the crash. The problem is people don't understand why market crashes. So they don't know what to do when this happens. So in this video, we're going to do 4 things. Break down exactly why this crash happened. Look at what the big players are doing right now. Zoom out and remember what Bitcoin has done in the past cycle, and finally talk about what you can realistically do from here. I won't give you hopium in this video. I'll just give you clarity. So why is the market crashing? This crash is not caused by one thing. It's multiple forces hitting the market at the same time until something broke. Let me walk you through the 5 major drivers. One is the Wash effect. Donald Trump's selection of Kevin Wash as the next Fed chair has spooked the market. Wash is viewed as a hawk, someone likely to aggressively shrink the Fed's balance sheet. Even though Wash needs to be confirmed first for him to assume office, liquidity is already leaving the market. This means tighter financial conditions, less speculative capital, and fewer dollars flowing into crypto. Number 2 is institutions are quietly leaving. In January alone, over $3 billion flowed out of US spot Bitcoin ETF. And in just 48 hours, BlackRock and Fidelity recorded over $800 million in withdrawal. 3 is the liquidation dynamo. This here is a real killer. In leverage trading, over $1 billion in Bitcoin positions were liquidated in a single 24-hour window. This wasn't fear selling. This was forced selling. When big leverage players get margin calls, the exchange sells their Bitcoin regardless of the price, and this further pushes down the price of the assets. And number 4 is crypto correlation with high beta tech. So as AI and tech stocks are beginning to sell off and go down in price, crypto is also doing the same thing. And the last reason is the rising global tension, especially between the US and Iran. When there's uncertainty in the world, people usually pull out their money from high risk assets or risk on assets and put it into risk of assets like the US dollars and the gold. So what should you do? Let's start with what the big players are doing. MicroStrategy's average Bitcoin purchase is $76,000. Bitcoin currently is trading near $63,000. That means they are sitting on an unrealized loss of over $8 billion. Yet, in the last week of January, they bought another 855 Bitcoin, roughly around $75 million. Michael Saylor is effectively trying to buy the floor. On the other hand, institutions like the BlackRock and Fidelity are pulling out. ETF outflow shows fund managers are removing money from crypto and putting it into cash, gold, and the US dollars. Binance just converted 100% of its $1 billion staple fund from stable coins into Bitcoin. This is their emergency fund, their insurance, and they moved it into Bitcoin during this particular crash. And they said if it drops further, they will actually put more money in to rebalance it and make it up to $1 billion. Now, before we talk about what you can do, let's zoom out. This is not the first time people have said that Bitcoin is dead. Every cycle looks the same. Bitcoin runs, crashes 50% or more, headline declared it finished, and somehow it recovers every single time. People don't lose money because Bitcoin crashes. They lose money because they panic, sell at the bottom, and quit before recovery. But not every coin will recover. Most altcoins from previous cycle never made a new high, never recovered, and some of them even disappeared completely. A coin being down does not mean it is cheap. There are 3 realistic paths to getting back into the market. Option number 1 is wait for confirmation. So you wait, let structure change, you see the momentum before you get in again. In this case, you don't catch the bottom, but you avoid destroying your capital. Sometimes patience is the trade. Option number 2 is DCA. If you're going to DCA, you have to be selective. For me, that means Bitcoin, Ethereum, BNB, Solana. So DCA is about discipline and not excitement because you have to play a long-term game. And option number 3 is risk-averse futures. It lets you profit from the market when it's going up and also let you profit from the market when it's going down. That is exactly why I am building Copy Me Crypto. Copy Me Crypto allows you to automatically copy vetted pro traders with enforced risk management. So one bad trade cannot destroy your account. It is not gambling, it is structured exposure. You can join the waitlist for free access at launch by going to copymecrypto.com.